In classwork 1, note that we have a pre-adjustment trial balance dated the 28th of February 2017. Our debtors control is sitting at 80,000. Provision for bad debts is sitting at 9,000. So the provision for bad debts must be adjusted to 11% of trade debtors. Now, when we record this in our statement of profit or loss, I'm going to start with the provision that we have in the trial balance of 9,000. And we need to calculate the new one, which is 8,800. By that, you can tell that the one in the trial balance must be brought down. So how did I get that 8,800? I took the 80,000 and I multiplied it by 11%. Okay, and then that is under other operating trend. In trade and other receivables, you're going to need to get 71,200. Now, when we record this, you're going to take on the debit. We need to bring the income up. So the provision for bad debt adjustment will be income. Income in provision uses our trade and other trade debtors. Provision for bad debt adjustment will increase on the credit side. For classwork 2, our debtors control is 70,000, but please note that we needed to write off a debtor A, which is a GOSI. It must be written off at 1,000 Rand. Now, provision must be calculated at 12% of trade debtors. Please note that 1,000 Rand, we're going to put it under other expenses as bad debts, but I'm not there right now. I'm just calculating provision. I'm just focusing on provision. So I will simply 100. It'll give me a provision expense of 580. How did I get that? I simply took the provision in the trial balance of 7,700 and I minused it from, so basically I had to increase 880. You take 70,000, you minus the bad debts that we needed to write off of 1,000 Rand. You multiply that difference by 12%, you'll get 8,880, meaning that our provision in the trial balance must be brought up. When we bring it up, it's an expense, the difference will be an expense. That's why it's recorded under trade and other, under other expenses. I keep on saying trade and other. Okay. And I showed you how we got that 580. It's simply 8,280 minus 7 to be adjusted. Okay. Now note that our trade debtors will also have to be adjusted by reducing by 1,000 Rand. 1,000 Rand is the actual bad debt that must be written off. In the current year, it was under adjustment. So our provision for bad debts will now be sitting and trade debtors will be 60,000. Will have to increase and the expense will be debited. But our program, I'll just explain that. In the general amount of increased to the average is 8,200. Therefore, we're going to debit provision for bad debts adjustment because expenses go up on the debit side. Now, classwork 3. Classwork 3 is pretty much the same as the other classworks, but read the adjustment carefully here. They said the entity received 2,000 Rand. So this 2,000 Rand is 40 cents in the rands from the insolvent estate of Tilio. Okay, the transaction was recorded in the cash receipt journal. So that 2,000 Rand was recorded in the cash receipt journal. Now we need to figure out how much was Tilio owing us. And from the total amount that they're owing us, 60% of that must be written off. 60% of the total amount that he was owing us must be written off. Here you can't just take the 2,000 and multiply it by 60% because 2,000 is not the total amount that Tilio was owing us. It is the only the 40%. So for us to get the 100%, we need to take that 2,000 and divide it by 40% to get the total amount that Tilio owed us. Okay, I'll show you a short method on how to do that. Provision is sitting at 6,000. Now let's get that 8,800. I took 86,000, I minused 2,000, and I multiplied by 60 because I want the 60 to be written off. It's always the percentage of what you want divided by the percentage of what you have. Because I've got 2,000, 2,000 is equivalent to 40 cents, and I want the 60 cents because the 60 cents is the one that has to be written off. The 40 cents has already been calculated. I needed the 60 cents. That is why here, when I calculated, I simply take my trade debtors minus my bad debts because the 60 cents is the bad debts. And the difference will be what we call a new trade debtors. And that is the one that I'm going to multiply by 10%. So it'll be 83,000. 83,000 multiplied by 10% will give you 8,300, meaning we need to take our provision that is in the trial balance up up means it's an expense, okay? So we're going to record it under expenses, and I showed you how I calculated that. Please note that in my trade and other receivables, I need to adjust my trade debtors. I'm going to subtract the 3,000. It is the 60 cents that I didn't get, meaning that Tilia was actually owing us 5,000. So if you want that 5,000, you just take 2,000, you divide it by 40 cents. It should give you 5,000. Let me just confirm quickly. Yes, it is 5,000. And that is why in that 5,000, we received the 2,000, meaning that the 3,000 will be written off as bad debts. We're going to put it in our income statement as bad debts. So in this case, because I'm busy with provision, I will not write, which is 8,300, get a new net trade 700. Because it was an expense, the difference was an expense. We're going to debit 300 and credit for provision for bad debts because it's going up. To 8,800, but up from 6,000 to that 8,000. It is our provision for bad debts adjustment because the debit amount will be 3,300. And that's how we got that expense, okay? Try this out. Pause for 5 minutes, try it out, and check out these solutions. Try this out. Pause. Give yourself 5 minutes. Once you're done, check out these solutions. Okay, that's it from me. Please check the next video for other topics. Let's